Hello. Welcome to today's installment of the FlockBase Church Accounting videos. My name is Jerry Walker. I am a CPA and have been since 1993. Also have the privilege of serving as the volunteer treasurer at my church, which I've been doing for about 20 years now. I'm also the founder of FlockBase Software, and our primary mission at FlockBase is to help churches. So we're hoping that you will find this information very helpful. If so, feel free to share it with your friends, pastors, ministers, church treasurers, anyone that you think might find this information helpful. So let's go ahead and get started with today's topic. Today's topic is the minister's housing allowance. So I'm kind of excited to visit with you about this topic today because it is a significant item that can save taxes for ministers. So the first thing that we need to know about a minister's housing allowance is that it's only eligible for ministers, so it's not available for non-minister employees. So you've got to make sure that before you pay or receive a housing allowance that you qualify as a minister. And under the tax code, there's a couple of criteria that you have to meet in order to be considered a minister. The first one is that you must be either licensed or ordained. So if you have a staff member at your church who is doing minister type things, but they're not licensed or ordained, then they're not a minister for tax purposes, and we cannot pay them a housing allowance. The second criteria to be defined as a minister is that you must perform at least one of the following things. You must either administer the sacraments of the church, be considered a religious leader by the church, conduct religious worship, and or have management responsibilities in the church. So obviously the senior pastor, as long as he or she is licensed or ordained, then they will qualify. Same thing with youth minister, music minister, as long as they're licensed or ordained. A children's minister could qualify as well, as long as they are licensed or ordained. So, okay, so I think we've got that settled. We got to be meet those criteria to be meet the criteria of being a minister, and then we can be paid a housing allowance. So, why would a minister want to be paid a housing allowance? And that is because the housing allowance is not subject to income tax. So that's a pretty big deal. In other industries, I'm a CPA and I pay for my housing expenses using money that I've already paid taxes on. But a minister gets to pay for their housing expenses using money that they have not paid income taxes on. So that's a big potential tax savings for them. Now, the housing allowance is still subject to the Social Security and Medicare tax. So the housing allowance doesn't completely, avoid all taxes, but it does avoid the income tax. And so that's where the savings comes in. Now, of course, if you've opted out of Social Security as a minister, then you're not going to be subject to that tax anyway. But opting out of Social Security is a different topic for a different day. One of the things I want to really make clear during our presentation today is that there are 3 limits placed on the amount that you can exclude under the housing allowance. And this confuses a lot of people, so I'm going to try to be as clear as I can here. The first limit is the amount properly designated. So you've got to get the amount designated somewhere in the documentation of the church. So whether that's finance committee meeting minutes, whether that's some sort of agreement between the minister and the church, whether that's in the church budget, there's various places it could be documented, but the amount must be documented, and it must be documented in advance of being paid. So you can't make retroactive housing allowance designation. So, if we agree upon a housing allowance today for a minister, that only applies to future paychecks, not the prior paychecks. So point number 1, we can only exclude at a minimum the amount properly designated. That's the first limiter. The second limiter is the amount actually spent. So let's say a minister designates $2,500 a month towards their housing allowance, but they only spend $2,400 a month on actual housing expenses. So they've underspent by $100 a month. At the end of the year, that minister just simply claims the extra $1,200 as additional income on their personal tax return. It doesn't change the way the church reports it, because the church is not responsible for keeping track of how much the minister has spent on housing allowance. That's the minister's responsibility. So number 1 is the lesser of the amount designated or the amount spent. But then there's a third limiter And this is the one that confuses and catches a lot of people off guard, and that is the amount you exclude from your income under the housing allowance cannot exceed the fair rental value of the house. So, for example, let's say a minister designates $2,500 a month for housing allowance, spends $2,400 a month on housing expenses, but the fair rental value of the house was only $2,300 per month. Then the amount that the minister can exclude on their tax return from their taxable income is only $2,300. So there's that third limiter there. And I think the IRS and Congress simply wanted to kind of put, a limiter on there to keep people from excluding just extremely large amounts from their income. If you think about it, let's say you were going to make a lot of improvements to your house this year. You were going to add a deck, you were going to add a pool, you were going to add a fence, you were going to add a sunroom. You're going to spend $150,000 on your house this year. I don't think the IRS wants anybody excluding $150,000 a year off of their income under the housing allowance. So they're trying to make it reasonable by putting that fair rental value limitation. And for determining your fair rental value limitation, you could ask a realtor in your area, probably look on some website like Zillow to get some fair rental values for houses similar to your size in your neighborhood and such as that. The things you can exclude under your housing allowance are just the normal housing expenses like your mortgage payment or your rent, your utilities, insurance, property taxes, repairs and maintenance, cleaning supplies, furnishings and appliances, landscaping and lawn maintenance, security service, decor, HOA dues. If it's to maintain your house, then it falls under the definition of eligible housing expenses. Then the final topic I'll touch on is what if a minister lives in a church provided parsonage? The value of that parsonage does not have to be included in the income of the minister. And yet that minister could still receive a housing allowance if the minister is paying for the utilities or paying for the furnishings or something like that. So I hope this information is helpful, and I hope you have a wonderful day.
Hi, my name is Kaylee and I work in customer success for FlockBase. I hope you found the information in this video helpful. If you did, I'd encourage you to share it with anyone you know who may benefit from it as well. Whether you're watching on Facebook, YouTube, or on our website, flockbase.com, be sure to check back here on the 1st and 15th of every month for new videos in this series. At FlockBase, our goal really is to help churches. That's why we started this video series, and that's why we offer affordable, fully integrated church management software. Whether your church is just starting out or you're looking for a new software that's specifically designed to meet your church's accounting and management needs, I encourage you to visit our website, flockbase.com. You can learn more about our software options, which start at just $16 per month, and you can even start a free trial simply by entering in your email address. We hope you'll check that out and that you'll join us again for our next video. Have a blessed day.